Hey guys, it's Vic from Grasping the Market and welcome to our market briefing. Well, last week, as we reported on Friday, we had a breakout from the intermediate term balancing range. And well, the good thing is that on Friday, we validated that break with an inside day. An inside day is a form of balance. So now what we need to monitor is on potential continuation or break from that short-term balance upwards or downwards. On the monthly, notice that on Friday we settled back above the key 2969 area, which is the level at which we failed last month and dived deep down. Now we're back outside and we're very close, relatively close to the all-time high. So we have some change on the larger time frame. On the daily, we see the validation of the breakout. The gap we left on that breakout on Thursday is still in place. So we have a couple of gaps in place. Let me highlight that one. We have a couple of gaps standing there, and technically there is like 3 ticks, but there's no excess to the upside. So I think the odds continue to be good that at least we will attempt to get to the 3000 area. Looking at the market profile, well, inside day, basically a validation overlapping to higher value. That means that there was a little bit of an impetus to the upside. Nonetheless, it is important to note that, as you see, the initial push lower was nicely rejected from the settlement of Thursday area, and it tried to go above and take the highs. It couldn't. Then there was a retracement, and this G push lower came at the time, if I remember correctly. I think Chairman Powell was speaking over here, but notice how it was rejected exactly 1 tick above the halfback and the POC from Thursday. So a lot of mechanical trading up here. The A low was mechanical, the B low was mechanical, and the G low was mechanical. Nonetheless, the rejections were strong in nature. But the important thing that we need to keep in our minds is, despite this huge excess and despite this second rejection, the Thursday high could not be approached. And then we started failing, and towards the end there was another attempt, and this time we made a lower high. So we need to take this validation. It is what it is. It is a validation, but we take it with a pinch of salt because of this important data point. I think it's a little bit strange, but if you connect the dots, you have weak low. You see that the people driving the market is probably short-term participants, and after the non-farm payrolls and ahead of the weekend, probably they didn't have the enough muscle to make the market go and trigger the potential stops that were over here. So focus for tomorrow definitely on assessing. Basically it will be continuation, but what we want to see is that if we have the market in short-term balance, we want to see if there is an attempt to break from this balance. So an attempt upwards with continuation targets the 3000 area, which is nearby. If it attempts to go and it fails, well, we need to pay attention to the single prints left on Thursday and the gap, because normally that's what happens when you fail in a balance range. At one extreme, you need to pay attention if you rotate back to the other side. That sometimes, many times happens. So focus for tomorrow, assessing continuation. If we get acceptance below, I would say below the G low, that the nodes change and brings into play the low and potentially the singles left on Thursday.